I've proposed a minimum effective corporation tax rate on many occasions. I do think, though, that the recent publication by the OECD that parallel to the BEPS process, they are recommending a minimum effective tax rate is actually, I suppose, a warning note to the government that this particular regime will not last forever. Now, I think in the context of Brexit and a post-Brexit situation, assuming Ireland continues to be an attractive destination in the EU, in fact, the Minister will have a problem on his hands because if we have significant transfers of financial companies from the City of London to Ireland, I would assume that that would be accompanied by significant transfers of intellectual property rights, which is, of course, at the base of what the previous speaker was talking about, where they're removed from certain jurisdictions and they are coming to Ireland for a variety of reasons. It's not just about tax. It's because we may be, and probably are, a more attractive destination for a variety of reasons, including our actual location, and including the fact that we have quite a lot of people in Ireland, or people prepared to come and work in Ireland, who have the skills that the companies require. But I think it's foolish in the extreme to allow very profitable companies pay very reduced rates of taxation. And I do think a minimum rate could be identified. On the, if I can just refer back to what the Minister said a while ago in relation to the consequences for the Midlands of the recent decisions in relation to decarbonisation. I do think, similarly, in relation to that, the Minister's proposal to have some kind of oversight in terms of the budgetary oversight committee, or to come to it to have a commentary. One way of addressing this would be to make more detailed information available on the actual figures behind the figures in relation to this, which the department should be able to get fairly easily, perhaps provided through the work of the officials who are working with the Budgetary Oversight Committee, and then have a discussion and see if there is a pathway through this. We are still facing, via President Macron and other people in Europe, the likelihood of digital taxation. Now, digital taxation is not a perfect mechanism of tax, but I think a lot of countries, out of frustration with the approaches of a number of countries, which include Ireland, are going to say that where their nationals are buying very significant amounts of services or products, which in turn are then effectively taxed at close to zero rate of tax in other jurisdictions, so that there is no flow of money to national exchequers. I think that's profoundly unfair, and I think the Minister would be well advised to reconsider that. And if the Budgetary Oversight Committee were to be an acceptable mechanism to the Minister, I think it could be done through that. I doubt that there are very few people in Ireland who really want to sell Ireland as an international tax haven. We want to sell Ireland as a location for international investment and for international employment. I would imagine that in most of this House there would be agreement on that. And in fact, given our focus on education in this country, we're well placed to take advantage of that. But unless we are prepared to address the tax issue, when I was in government, we went along in great detail with the BEPS process. The latest iteration of that is, as I say, the OECD proposals to move towards a minimum effective tax rate. The alternative is a digital tax, and I don't know, maybe the Minister has done studies on the likely impact of digital taxes. I have also asked the Minister detailed questions through finance questions on the amounts that have been claimed back at increasing rates by countries like Italy in terms of, as they've introduced their own taxation, they are claiming back payments that Ireland will find is due to countries like that as a consequence. Now, I do think, Minister, that all of that could be the subject of fairly detailed reports, because I get regular answers from your department and particularly from the revenue commissioners on that. So that data is available, even if it's not entirely complete. We also have had the discussion that we are locked, or you are locked, Minister, in this problem that banks have enormous losses forward on a basis that I'm not aware. And tell me if you can find a country that allows the kind of continuous losses forward over a very, very long period of time. We're now in year 11 since the bank crash, and those losses started to be built up basically from 2007. So we're talking about 12-year-old losses. We're talking about banks, in some cases, having profits in the realm of £500 million to over £1 billion. And it's really silly that those banks can continue now. In fact, it's possibly the most valuable things about the banks is the fact that they have these losses forward. But in a situation where there's all sorts of demands on the Irish Exchequer, where ordinary workers didn't get any kind of tax relief, in a situation where incomes for a lot of workers are going to rise by 3% per year, where people on social welfare got no increases. It just seems profoundly unjust in terms of the principle of taxation that very profitable organisations should continue to get very major tax breaks, while ordinary workers, people on social welfare, pensioners got little or nothing out of this budget. Now, can I just say that in this particular case, if the Minister is prepared to put forward a format of reporting and discussion on this that would meet his requirements, I think that would be very positive. Area of taxation of the types of sectors that we're talking about, Minister, would be and would in fact cover some of the points, would be a financial transactions tax. And again, a financial transactions tax would have a massive impact in relation to poorer countries right around the world. Because remember, one of the perhaps unsought side effects of the kind of tax regime that Ireland and Luxembourg have developed is that the net effect, and you will know this because I know a number of years ago you arranged to meet Oxfam, and I was very grateful that you did that, is that in poorer countries are basically relieved of their tax earning capacity in relation to raw materials. And I do acknowledge you have changes in relation to transfer pricing in the legislation. It's not clear yet how they will play out, but I think you do aim to make the system more fair. I would acknowledge that. But in relation to transfer pricing, you have to have some way, Minister, in a globalised, financialised world where people who make a lot of money pay tax, because otherwise people who have no money, who are at the bottom of the heap, means that they have no income, which means that their basics of life are unavailable to them and unaffordable to them. And that is why the OECD type approach is much the best approach, accompanied by good governance and quality taxation systems. But you're really, working on the Augustinian principle of Lord, make me, as it were, tax effective, but not just yet. And really, as I said, we are going to end up paying, and we are already doing it, and you have the figures, very large amounts to countries like Italy, because they are now locating various types of digital taxation in Italy,
Okay,
and
you.
that means they can take into account, for instance, activities and taxes that companies have paid. Those companies are paying in Italy, for instance, on labour, and ultimately they can come back and look for what we could call a refund from us, and they're doing it, and they're doing it increasingly. So it's a bit of a mug's game to stick our head in the sand and deny all of this. You have to be able, I think, to show some progress on some areas.